Hi, this is Zak Mir with the Bulletin Board Heroes here at Box Markets on Thursday, the 12th of August. Starting off with Asimilar, where the conundrum continues, whether it's at the floor of this rising trend channel from back in January or not. 43p or so, the floor of the channel, that's uptrend line there from the end of April. We've got the 200-day line just below it at 38 pence. I suppose that's where the shares could still go. We obviously retested the 200-day line at the turn of the month, April, May as well, so there's the risk of that. But so far it looks as though the shares are making a brave attempt at finding support in the low 40s. Initial sort of barrier here up to the line of resistance from last month around 49.50 pence, and then after that up towards the 50-day moving average at 57, while we hold above the recent support at 42 and a quarter pence. But I suppose at least while we're above the 200-day line and with that catching up with the price, this situation looks like a buy on dips rather than anything else. Onto a stock which seems to be also exactly where we left it the last time we looked at it, Caspian Sunrise. Here the shares attempting to break neckline resistance there, the old peak there around 2.9 pence, so finding support in recent days at that particular number. The big prize here is that we've made a base. I'm going to break out of the range and head towards 4 to 4.25 pence, which is where the stock was back in June last year. So let's see if that particular scenario pans out. On to another stock which doesn't make too many appearances here, Empresaria Group, but the excuse here is a massive spike for the shares through resistance, and obviously a very strong looking chart as well. Got that sort of sideways move, then vertical sideways, etc., etc. That tends to be seen in the most bullish of situations, hence the inclusion today. Top of the channel here at the moment looks to be up towards £1.20, £1.25, and that could be seen as soon as the end of next month. Stop loss on the buy argument at the moment, back below the 50-day moving average at 77 pence. I presume this is not a stock with a great spread or attractive spread, but there we are above the 50-day line, looking for £1.20 for Empresaria, and a very strong looking chart indeed. Moving along to a stock which I haven't quite covered for quite a while, Galileo Resources. Here we've had the shares sort of tiptoeing around recent support, so I suppose we've got a line of resistance there which is broken from May, which is a plus point around 1.2 pence. Got the possibility that this is a falling wedge breakout, which would also be great. But I suppose the shares really only out of the woods are above the 50-day moving average around the 1.32 level if you are cautious. But at least we have broken that falling wedge from early in the year, and that does suggest that this could be the beginning of a better wave for the shares. The other point to note here is the way that with the lower low that we've had for the start of August, we actually had a higher RSI trace. So that bullish divergence is something that indicates that there may be gathering positive momentum. Big picture target with the fans of the shares up to 2.4 pence on a 2 to 3 month view, but obviously we could get through that pesky 1.3 pence area first. At this stage, only back below the recent 1.1 pence zone support, really pulling the rug from under the idea of recovery here. After obviously quite a long time of consolidation, we were up at 2.6 pence at the start of the year. Moving along to a stock which, again, I don't cover very often for obvious reasons, because it doesn't actually appear here very often in the leaderboard. But here we've got a situation where we've got a gap rebound. So there was a gap there down towards the 81 pence level. The lows so far in August at 83, so that's impressive. And that's a sort of bona fide buy signal in its own right when the stock's too strong to fill a gap, and that would imply that we should at least be able to head up towards the 200-day moving average, currently £1.16, while we hold above that 90 pence level and that June resistance line. Obviously back below 81 would change the picture, but good bullish divergence here again with the lower lows since the middle of last month, but higher RSI trace there for Griffin mining. On to yesterday's highlight, or perhaps not quite the right word, but Helium One is here. And interesting to see that the shares, after that brief bear trap below the 10.35 pence April low, yesterday they actually found support today at 10 and a quarter. So I suppose it's another minor bear trap. Does suggest that perhaps the market's starting to think that this situation is a bit overdone. I think the news yesterday only covered really a part of what helium can offer. Let's put it that way. Current situation is that we'd like to see an end of day close back above the 200-day moving average around 12.85 pence. That would be the first sign of a recovery or acceptance of the sort of support zone here towards the low sort of double figure area. But 12.85 pence plus on an end of day close basis would certainly help the cause at Helium One at the moment. In contrast, it's just nice to look at Bluejay mining, which I think I've done every day this week. Can't quite remember, but just incredible here, really, the gaps to the upside. So second gap holding as well. The shares also on the first gap held above the top of the gap. Second gap, they're also held above the top of the gap. So that does suggest on an intuitive basis that there's still some firepower here. Still looking for 18 pence perhaps by next week, sometime maybe by the end of next week. And that's valid while there's no end of day close back below the floor of the current gap at 13, what's that, 12.3 pence. So above 12.3, looking for 18 on Bluejay, but certainly quite an outstanding situation there on a technical and perhaps fundamental view as well. Stock which I mentioned earlier in the week as being very, very oversold was Powerhouse Energy. And I did say then when the shares were, I suppose they were around 3p, something like that. But I did say then that all the last few occasions when the RSI has gone down to the 25 pence level, it's seen 50% or more in the share price rise subsequently. So we've not far off that at the moment. So we managed that in May, with the move from around 4.5 to 6.5. Obviously, the move in October was from around 2.5 to 11, so that certainly worked when the RSI hit 25. And maybe the best of the bunch back in, if I can get it on this chart, back in December 19, when we had the RSI extremely oversold there at around the 0.3 pence level. So the charting working at the moment for Powerhouse Energy, and initial target here up towards the 50-day line at 4.6 pence, and maybe we could squeeze up to the 200-day line at 5.5 pence by the end of this month if we are lucky, which at the moment looks like we are. Moving along to a stock which again gets periodic mentions here in the bulletin board heroes. Here we've got Quadrise Fuels, and I suppose the chart not a million miles away from what we've seen at Powerhouse there, but breaking that triangle and breaking above the 200-day moving average at 3.25. While we're above that, I suppose it's tempting to think that the shares could fill that gap from May up towards the 5.4 pence level, perhaps as soon as the end of this month. Upside certainly valid while there's no end of day close back below the 50-day moving average around 3.5 pence, and that's also today's intraday low to date. Moving along to a stock which is certainly the punter's favourite. Here we've got Supply Me Capital, and so there's just a hint during the week, earlier in the week, that we were about to sort of enter a falling wedge formation and perhaps break out of it. So breaking 0.29, it's given us a move towards the 50-day moving average at 0.33. End of day close through 0.33, I think would be justified in looking towards the 0.4 or 0.45 area, which is the present level of the 200-day moving average. This stage, I suppose, the best stop loss would be an end of day close back below 0.29, that broken resistance line, but that's probably too tight for most. We just have to rely on the 0.25 area holding for now at Supply Me Capital. Just going on to final stock, once again with a sort of a reasonable technical interest, Tower Resources. Here we've had shares, I suppose, all over the place over the recent past, and interesting that after all the jiggery-pokery, we had a bull trap through 0.6 pence area, which we were hoping to break. We're back towards the recent support around 0.37. That makes for a reasonable stop loss area. Maybe you could allow down to the 200-day line at 0.35, but expect perhaps more volatility between 0.4 and 0.6 over the near term. That's it from me today. More updates tomorrow.